Does AMC, is that justified at over $30 a share after the latest offering?
Well, it's not based on fundamentals. You have a lot of the momentum driven by retail investors who are not necessarily looking at the fundamentals. The current share price suggests that it should be trading at mid-20s times consensus 2023 EBITDA, whereas it's typically traded between 7 and 9 times that. So we think it's well overpriced here, but we don't necessarily think it's going to come back down to trade in line with fundamentals as if retail investors maintain this fervor.
Well, and so would you say that AMC has taken advantage of the run-up in its share price to shore itself up financially? I mean, has it bought itself time, or is the return of people to the box office itself telling you that this company's worth more than people thought?
Well, I think they've absolutely been opportunistic. They've done a great job of, selling shares at this elevated share price, and they've paid down some debt. They're looking at now purchasing some additional theaters to boost EBITDA in their out years. I still don't think it's worth where it's trading right now if you look at fundamentals, but they're absolutely taking advantage of where the share price is trading these days.
Brent, where do you think this is all headed as AMC revives and starts to figure out how to survive and maybe even thrive once we get through this unique period?
Well, it's definitely good news that Quiet Place 2 had such a strong opening, as well as that Cruella did well, despite the fact that it was available for rental on Disney+. But I think when you look at AMC's financials, there are some major questions here. They have a great deal of debt. They, as of their last quarter, over $5 billion worth of debt. They're still losing money. And, there are some major questions about how fast the box office will be able to recover from what has been over a year of closures, capacity restrictions, and skittish audiences.
So I just want to pick up on that, Brent, for a moment. As people kind of get back into the theaters and we go from being excited at a $100 million weekend to kind of demanding one, what's priced in for the theaters? What are they going to be able to do to survive in this Netflix world? And even AMC has done some unique things with structuring, a revenue share, for instance, with streaming.
Well, I think, as you just alluded, what's the landscape post-pandemic is fundamentally altered from the one pre-pandemic. You look at windows, which is the industry term for the amount of time that movies are exclusively in theaters, and they've been cut in half. At best, they'll probably be about 45 days before major films will go onto home entertainment platforms, and that could end up really cutting into a film's box office performance. And as you said, there's only more competition in the streaming space. You have Disney Plus now, you have HBO Max, you have Paramount Plus. There are a lot of options for consumers. I think in the short term, people are eager to get out of their homes, and that means they'll probably buy movie tickets and they'll go to cinemas. But over the longer term, maybe convenience will win out.
And we know reportedly that Mudrick, which was one of the shareholders of AMC, kind of made Alicia's point to its investors earlier. It sold out of reportedly sold out of its stake, telling investors that AMC is overvalued. So we have a $5 billion debt load, Alicia, on about a $15 billion market cap after this run-up. How are they going to be able to service that debt and get back to a healthier company that can be viable for that future that Brent's describing?
Sure. I think that's a great question. I think they're going to do more at the market share sales since the share price is so elevated. As long as it stays elevated, they should sell more shares and repay their debt balance as much as they possibly can. I think that should be priority over purchasing new theaters or, distressed theaters. But as long as they can repay a significant amount of debt, they can get to, some growth. We think optimistically 2023 box office can return to 2018, 2019 levels. Optimistically, with shortened theatrical windows, you have the balance of big blockbusters staying in theaters a little longer. But on the other end, you have smaller films that would have gone direct to streaming now potentially playing in theaters in a shortened window. So the theaters will actually get that revenue, whereas they would not have otherwise.
Shepard Smith here. Thanks for watching CNBC on YouTube.